5 to 10 minute show that will give you some actionable steps to consider for the week for your business. And at lunchtime on Wednesdays, we present our in-depth show of between 30 minutes and an hour, where we go through complicated legal aspects of your business in a simple to understand, plain English manner. And whether that is through educational pieces or interviews with experts in their fields. Hi everyone, and welcome to Business Legal Lifecycle TV. My name is Jeremy Stretton, one of the founders, and today I'm really excited to bring you an interview with Daniel Holden, who is the owner and founder of the Holden Capital Group. Just to give you a bit of background about Dan, so the Holden Capital Group is Australia's leading construction finance brokerage company, and they've been featured in quite a number of magazines and publications, including the Financial Review, the Business Review Weekly, the Courier Mail, Property Observer, the Real Estate Conversation, and the urbandeveloper.com, as well as Establish and The Advisor. Holden Capital has also won a number of awards, including the Australian Broking Awards for Commercial Broker of the Year in 2015, 2016, and 2017, the Better Business Awards Commercial Broker of the Year in 2016, the BRW Fast Starters Award for 2015, and Dan, as well as Holden Capital, have been the finalists in a number of other significant competitions. Holden Capital's main focus is to leverage their skills, knowledge, and resources, as well as their relationships with clients and funders, to structure finance projects and solutions for their clients. The group also includes HC Invest, that provides sophisticated property investors with the opportunity to invest in quality projects that Holden Capital comes across. I've known Dan for quite a number of years, and I've done lots of work for him. And I'm really excited to do this interview because we're going to go through a number of different topics that you're going to see some in practice, practical tips on how to actually do a lot of what we talk about here at the Business Legal Lifecycle TV. So I'm going to start off by going through a bit about Dan's history and how he started Holden Capital and where he came from. We're also going to talk a bit about building the business, and we're going to go through some practical examples of what Holden Capital have done to expand their business and how they've helped clients, as well as go through a few of those awards that they've won, which is quite a lot for a business of its age. We're also going to talk about expansion and what that they're looking at expanding, and where they have expanded and where they're expanding into the future. And on that, we're going to talk a bit about HC Invest, which I talked about before, and how they at Holden Capital use that to help provide their sophisticated investors with the opportunity to invest in projects. So please watch this interview. As always, if you've got any questions, you can feel free to ask me at lifecycle@jeremystretton.com. If you listen to the podcast, or if you're watching this on Facebook, feel free to write a comment or private message Business Legal Lifecycle, and we'd be happy to answer them. And if you've got any specific questions for Dan at the end of the interview, I go through the different ways you can get in contact with him, as well as how you can get some really great value from him and Holden Capital on their podcast. So please enjoy this interview with Dan Holden. Welcome, Dan, to Business Legal Lifecycle TV and our podcast.
Hello, mate.
All right, so can you start out by telling us a bit about your history? How did you get into the broking business?
Yeah, so I actually started in property development side. So I worked for a property developer for about 5 or 6 years. So doing acquisitions, obviously feasibility, due diligence, right through construction management, and managing the sales agents on completion. So getting the stock moved on. So did the whole kind of, I guess, life cycle of property development, working for a private practice property developer, and did that for 5 or 6 years. And then I actually got approached by a national finance firm. So they were the largest in the country at both debt brokerage, but also they had a balance sheet where we invested capital into projects. And so that was 2008, 2007, and then 2008 the GFC came along, which was a good bit of fun. And then spent about 5 or 6 years with them. So we actually transitioned across into, as opposed to writing lots of checks, obviously post GFC, we kind of changed focus a little bit and did a lot more kind of workouts. We had invested into quite a few projects, and so managing that kind of highest and best use and getting the money back is just as fun as writing the check. So we did that for a number of years. And then about 2011, essentially set up on my own.
Yeah, so that's Holden Capital, which is the business where we met when you were there. So why did you start Holden Capital, other than the fact that you had to leave? The other business was changing, so you left that. Why did you start that business?
Yeah, so it was a little bit reluctantly, to be honest, because I was pretty happy doing what I was doing and working for that firm. However, their focus really wasn't on I guess debt origination and structuring deals and investing in deals. They kind of shifted more to buying shopping centres and that kind of stuff, which I was involved in for a little while, and that was fun. We bought a few assets, but I really wanted to get back into structuring new projects and helping get projects shovel ready and funded. And so, as I say, it was a little bit reluctantly that I set up on my own, but obviously no looking back, and we're just about to turn 6 years old. So December 2011 we started, and now December 2017.
Excellent. Yeah, well, it's a good time. We started business around the same time, which is good. Yeah, it's good to go through the journey together. So obviously you've got a lot of experience in the mortgage broking industry and the commercial broking industry. So how's that helped you with what you're doing now in your business and expanding?
Yeah, so I think it definitely has benefits in terms of understanding, I guess, the developer's journey. So often when you're financing a project, you're really only involved from it basically being shovel ready, in a sense that they've generally got approvals, they've generally got some market acceptance or a really good exit strategy in place, and they've got construction. Everything's kind of ready to go, whereas obviously a developer's journey starts a lot earlier in terms of feasibility assessment, site analysis, highest and best use of what you can put on it. So understanding that whole journey, and also understanding post-construction journey as well. So a number of projects I worked on, by the time you finish construction, there's still probably 6 months of work until you actually get, you only make your profit out of last piece of product you sell. So there's still a long journey, and I guess understanding that is really good. And also a good knowledge of the variables in terms of what's maybe negotiable or flexible, and what are the non-negotiables. So just understanding those kind of constraints can be really valuable in terms of understanding where the developer's coming from in the discussion, and also just helping them get to the outcome that they want.
And that's really key. So I'm sure that developers love that. They love the ability to have someone who's in their corner, helping them out and actually understanding what they're doing.
Yeah, absolutely. Yeah, that's probably the biggest advantage I've had, I guess, with my background. A number of the guys in the team are kind of more traditional bankers, but they're property specialist banking background. So they weren't kind of working in a teller or anything. They were actually doing in the property side, but they've got long careers and they understand how the I guess the property dynamics work as well, which is good. So
yeah, excellent. Yeah, well, that's a good lesson for everyone to learn about. Having some experience in the field and then using that to actually help your clients, because at the end of the day, that's what they need, and that's what we need to do to help them. So let's talk about building the business. Obviously, you started in 2011. There's a number of different businesses in your field. There's always competitors, and you've built it very well, as we went through in the intro, with all the awards that you've managed to get and all the recognition. What do you see as the keys to that success that you've got from the Holden Capital business? Yeah,
so I think probably the key one that comes to mind for me is really only offering to do what you know you can do. I guess there's a lot of like most kind of industries or sectors, there's a lot of people that'll say, yes, I can do this, and promise the world, deliver an atlas. I think for us, our approach has always been, we don't have to be all things to all people. We can just say that this is our target project or developer to work with, and we just want to work with them and have fun doing transactions with those particular people, rather than just saying, yes, we can do everything, and trying to find a solution is actually knowing we've got a solution and taking on that job because we wanted to be involved in it. So I think not trying to take over the world has been a bit of a key to our success, and only offering to do what we know we can do. I think that's really important. I guess that also comes from my background of doing the property development side, where I definitely wanted to know what was achievable, rather than a bit of a hollow promise that something might be achievable, and then wake up 3 weeks later and go, that actually isn't realistic. When you're a developer, you might be buying a site, you might have something that is shovel ready and it's not being funded on time. Really frustrating. So just getting sometimes, even if it is a bit of a slap in the face in terms of the truth or what is achievable, I find that's a much better way to be. And sometimes we might lose jobs because of it. That's okay. I'd prefer to just say, look, this is what I think is achievable, and hopefully we get the job. And if we don't, then that's okay as well, because I'd much prefer to do that than call in 3 weeks' time and say I overestimated or underestimated what was achievable, and as a result, you've lost a month of your life, and you've been mucking around with all this time. So I think that's really important, and I know that a number of our repeat clients really appreciate that kind of angle as well.
Yeah, and what kind of value do you put on those repeat clients? Are they, is that the main source of your work? Is that where you like to be? Is that, yeah? Definitely,
yeah. So probably until maybe only 2 or 3 years ago, we actually only dealt with repeat clients from. So we only started really kind of marketing the business, I think, in about 2015. At the start of 15, we started pushing pretty hard in terms of broader reach and growing the business interstate and wider. Prior to that, it was all just repeat and referral business, which was great because marketing is kind of time consuming, and going out and talking to new people and kind of kicking stones over to find transactions and new opportunities is a big consumption of time. So to have that repeat business is fantastic. And even now I still work with clients that I've had for 8, 9, 10 years, and they send me their feasibilities of things they're looking at. They ask us to look at structures and different ways to do things, and it's really exciting being part of that journey.
Yeah, excellent. Yeah, I think that's a good lesson for anyone watching or listening to this, that repeat business is a much better way of working. If you can keep your clients happy, then you're going to keep on getting work, and it's a lot cheaper to keep those clients and then to go out and find new ones. Can I just go back? You said the key to the success was niching in the area that you have. How does that compare with the other people in your field? Is there a lot of people who try and be all things to all people, or
yeah, I guess there are some finance houses. Like, I don't know many that are kind of as niched as we are. There are a number of finance houses that might do construction finance, but they also might do your home loan, your credit card extension, your boat loan, your car loan, whatever. We don't. All we do is deal with middle market, private entrepreneurial property developers. So we don't deal with, I guess, mums and dads doing a splitter block, and we don't deal with we don't target. We do deal sometimes with the bigger REITs, the listed companies, but we do occasionally do some work with them, and so we're really focusing on that middle market of a developer who's probably got a couple of staff. They make their substantial amount of their income. They might have other income streams, but their day-to-day job is adding value to property, generally via property development, which is buying something, turning amalgamating 3 houses and turning them into 30 apartments or townhouses or something. So it's that business developer, that property developer that actually has a business model of property development. Yeah, excellent.
So as I said it before, you've won a lot of awards, and we went through those in the intro. How do you think they've helped you in your business journey?
So definitely, I guess in terms of the external, it's helped both potential borrowers to, I guess, get a bit of external validation of who we are and how we manage our process. Definitely in the since late 2015, when the banks tightened and we moved into a lot heavier focus on non-bank private capital, uncovering those new lenders or investors in that space, having those awards definitely, and particularly overseas, having those awards had a big impact in terms of being able to say we're number 1 in the country 3 years running, talking to whether it's a high net worth individual or a family office, a sovereign wealth fund, a hedge fund out of America or Asia. Being able to, I guess, have that validation has been really important to either one, get our foot in the door, or B, to get there, I guess, expedite the respect of what we're doing, which is great. I guess what it also does in terms of the growth of our business is it gave us something to initially achieve, and then when we did start winning some awards, is to continue to lift our game to continue to achieve, which has been really good. I guess it's also good for our team as well. To know that they're working with the number 1 in the country is kind of a bit of a a chest puffing kind of thing to say, this is who we are, and this is as a team that we work together. So it also interesting just to see the amount of kind of veracity that they go through to doing that. The length of the submissions that we have to do, we have to go through a number of case studies with them in terms of full submissions, the credit preparation, right through the whole process, how we manage it, objectives, clients' objectives met, did we overcome obstacles and get the outcome. It's really quite a long process, which is good. It means that we have to continually make sure we're on top of our game, and also keep improving each year so that we know that we're in with a shot to get it again next year.
Excellent. And you said at the beginning there you were talking about investors. Do you find it helps more with the investor side or the developer who's coming to you to do a development? Or is it 50-50 that people...
I think it's probably 50-50. I mean, probably in the last 3 years since we've been going for those awards and getting them, it's definitely helped with the developer to... I guess in terms if they had a choice of who they were going to work with, they would choose us because they go, there's a best to work with the best.
Yep.
It's probably only been about 24 months now that we've been actually chasing a lot of the private capital since the banks kind of tightened the reins a little bit. So it's definitely helped in that regard. And I've probably been, in terms of my day-to-day tasks, I've been more involved in that hunting capital and going out there and talking to people. I think I've been to Asia every kind of 10 to 12 weeks for the last 2 years. So going and kind of pounding the pavement literally and going over there and talking to, the sovereign wealth funds, the hedge funds, the massive, billionaire family offices. And it's definitely helped in terms of getting in the door there. And I guess them just being a little bit more comfortable with who they're talking to.
Yeah, absolutely. Well, that's good. So let's talk about expansion. So we're talking a little bit, the month of November when we're recording this is our topic is for the Business Legal Lifecycle TV is expansion, which is phase 7.
Yep.
And you've obviously done a lot of expansion recently. You've opened in Sydney and Melbourne. So can you talk a little bit about the criteria that you used to make the decision to expand? Like, why did you do that?
Yeah, so we've actually so Brisbane head office, Sydney, Melbourne. We've actually got an office in Hong Kong as well, and that's for inbound capital. So raising capital from over there. We only finance projects that are in Australia.
Yep.
And I guess the Eastern Seaboard, in terms of geographic location, we've been doing transactions across the Eastern Seaboard, for the last 5 or 6 years, and it was actually our focus more to prioritise Melbourne over Sydney.
Okay.
But in terms of, I think your question was, what was the criteria?
That's right. Yeah.
It was actually people. So a little factoid is that all of the people in the business I've known before they started.
Okay.
I think, except for our research analyst, who's only just recently joined, we kind of poached him out of uni. But everybody else I've known for a pretty extensive amount of time before they joined us, including the people in Sydney and Melbourne.
Okay.
So when you say the criteria, as I say, we were initially going to focus on Melbourne.
Yep.
It's got a lot of similarities to Brisbane in terms of relationship driven, kind of a little bit cliquey. Sydney's a little bit more transactional, a little bit more I don't know. Yeah, transactional is a nice word. so we'll put it that our focus was on Melbourne, but it was actually just through, as I say, people that we knew, that we had the right guy at the right time in Sydney, and that was couldn't miss that opportunity to get him as part of the team, and so we actually expedited Sydney first, probably about maybe 18 months ago, 2 years ago. And then Melbourne, again, we actually waited for the right person. So Sydney, we expedited for the right person.
Yep.
Melbourne, we actually waited for the right person. So
wow. Okay.
in terms of the answer to your question criteria, it was all about people.
Yeah. Well, that's good, and I think that's important to you need to have a good team. You can't just expand for the sake of expansion. And I think the fact that you waited to see what team you're going to have and make sure you had the right people in place is very important. Because one of the questions, and one of the things that was going ahead in my mind was, do you need to be in those cities? But you to get those clients, you do end up needing to have those locations.
Yeah, so we were lucky out of Melbourne. 3 of the guys in our Brisbane office were born and bred in Melbourne, and moved up here kind of 7 to 10 years ago. So we already had some pretty good traction in terms of a client list of people that we were talking to down there, and transactions were happening.
Yep.
And so that definitely helped in terms of Melbourne. In terms of Sydney, we had, I think, 2 of the guys from our office were from Sydney and are now in Brisbane.
Yep.
So we had some existing kind of relationships and networks there that we were talking to. But definitely having, I guess, people on the ground there has helped massively. And I'd say we're now probably, I don't know the exact number, but I'd say we're now at about 65% Brisbane.
Okay.
And hopefully less than 50% in terms of transactional next year. That'd be great.
Excellent. So yeah, the advantage for your business in having those other locations is having someone on the ground that can actually come in and do the work, and someone can actually come into their office and see them rather than having to come to Brisbane. Is that what you find? Or?
Absolutely. And I guess it's also, people talk about the macro property market saying, oh, Sydney's booming, Melbourne's flat, Brisbane's had a boom and now it's going to retract, and they're all very macro, whereas when you're doing a project, you need to know the micro detail.
Yep.
And so when I look at a project in a particular area, having, particularly within Brisbane, Sydney, obviously and Melbourne, we're across, but not as closely. I don't know, pick a suburb, Mount Gravatt or Chermside or Tenerife. So Tenerife, there's a lot of cranes in the sky. We were just commenting on it before. There's a lot of cranes in the sky. There's a lot of projects coming out of the ground, and you might look at that and go, well, that's a risk. We look at it and go, well, we know the developers behind the projects that are in that location, and we feel comfortable that their business model, their balance sheet, and their approach to development is sound, and that they're not the kind of developers who are going to turn around and fire sale their units if they get stuck in a bind.
Yep.
Mount Gravatt, on the other hand, I'm not kind of talking in exact comparisons or at the other end of the scale, but I'd be a little bit more concerned about in terms of there's nowhere near as many cranes in the sky, nowhere near as many apartments, but I know some of the developers who have either transactions there or are planning to do transactions.
Yep.
May have a little bit more of a, if the sales rate isn't where they expected it to be, that they might start dropping prices to expedite the project and get out of it. So it's just understanding those little micro kind of markets and understanding the price point yourself rather than needing to read the valuation report or kind of do homework from scratch. That definitely has a lot of bearing on how we assess a project. And so having that local knowledge and being involved in transactions on a daily basis helps significantly in terms of credit assessment.
Yeah, excellent. So more recently you created HC Invest, and that's to help developers with their capital needs for new projects and providing sophisticated investors with the opportunity to participate in projects. Can you tell us a bit about why you expanded into the investment fund side of the business and the challenges it presented?
Yeah, sure. So I guess we've actually been doing, so Holden Capital Partners, we've now kind of changed the name slightly from Invest. So Holden Capital Partners, we've actually been doing, I guess, investing on behalf or lending on behalf of investors for pretty much since day one.
Okay.
So when we've got a high net worth individual or a family office who wants to participate in a transaction, we'll do obviously the origination of the transaction, the pre-credit, put together a pretty decent credit paper. They're normally 20-25 pages outlining the whole risks assessment, and to kind of package everything up so that they can make a quick decision. And where we've got a individual high net worth, or maybe 2 or 3 of them, we'll kind of manage that process on their behalf, and they'll write the check and we'll manage it. So we've been doing that for quite a while. At the moment, we've probably got maybe 50 or 60 million out on behalf of investors.
Okay.
And that's in comparison to last year. I think we did 340 million of debt and equity across 84 transactions. So the management side of it is a reasonable chunk of our business, but we don't ever advertise ourselves as a lender. We always advertise ourselves as an advisory or a brokerage firm. If one of those solutions happens to be one of our investors that writes the check instead of a mortgage trust or a bank, and that's the outcome, then that's great. But we don't we're not a lender in our own right, saying we're another banking entity that's going to lend you the money. We're just managing that on their behalf. And so I guess what we've now kind of shifted into is actually opening those opportunities further afield, and kind of now advertising it as a potential opportunity for other people to participate in. So some examples of transactions, we just did one in October. We invested 1.2 million into a townhouse project on the Sunshine Coast. Okay. I think the bank put in 6 million. We put in 1.2. The developer put in 1.4. We invested that money. I think the investors get 28% per annum IRR, which is a pretty good return. Yeah. 23 of the 27 townhouses were pre-sold. They actually had started construction. So it's a 10-month build for the townies. We got in for month 3 or 4, so we've only got 7 months left of construction. 3 months to allow the developer to settle all the sales, repay the bank, and then repay us. So the investors will get a 10-month loan term, 28% IRR, which is better than 2% in the bank. There's obviously risk attached to it, but we've identified those risks. The builder developer, I think they were number 10 on the BRW Fast 100 this year. I think we're number 14. They've been around for a long time. I've known him for 4 or 5 years or thereabouts. Yep. So, kind of able to understand his character and his business model. And so, yeah, we took the assessment that they were that was a good investment. Another one that we're looking at, about to send to investors next week, is first mortgage on a development site. It's about a 60% LVR. The investors get 9.5% per annum, and because it's capitalised, that works out at about a 9.95% IRR. We've got a first mortgage on the land. The developers own the land for 2 years. We're refinancing a bank. Fairly low risk in terms of the sponsor. The developer is of reasonable substance. Yep. It's got approval. They've got 10 of the 28 pre-sales they need, so it'll be pretty much a 6-month loan. Yep. And as I say, compared to getting 2% in the bank, that's pretty good. The other thing I like about that is that we've got full visibility into the exit. Yep. Because we're managing the construction loan. We know the process and the obstacles to getting that construction loan in place, and that construction loan is actually what pays out that investor loan. So we're kind of got daily visibility into how the repayment's going and how that's happening, and that allows us to give comfort to the investors that everything's going well. So going forward from there, next year we'll probably do, I don't know, 10 or 15 transactions. As I say, not trying to take over the world, but it's really where we can top and tail a construction loan. So a lot of developers prefer to be funding with a bank, and so therefore we can but they don't like to do first mortgage on a development site, and they don't do really kind of high gearing or joint venture equity style. So we look at both of those and go, well, we're comfortable lending 2 million on a $3 million development site, whereas the bank wouldn't like to. And if the bank's putting in, like the townhouse example, they're putting in 6 and a bit, and we're matched kind of dollar for dollar with the developer, we get comfortable with all the other aspects of the project. We see that as a nice investment. Most of them are short term, i.e. 6 to 12 months, and it allows the investors to kind of pick and choose their transactions and roll money over between projects. I guess that's the other thing, is that it's not a closed-end blind fund. They're not just investing $500,000 or $1 million with HCP. They get to see the transactions, decide which ones they like or don't like, and then they nominate or choose to participate in the transaction. So it gives the investor, they're in the driver's seat. We're just presenting opportunities, and then they make a decision if they want to invest. So from that point of view, I like it as well, because it's not us making decisions on their behalf. It's us presenting things, and if they like it, then they participate. I think we've done 5 or 6 transactions in the last kind of 6 or 7 weeks, and they've all been fully subscribed within 24 hours. So there's clearly an appetite out there for investors to get involved, and I guess they see all of the cranes in the sky and the projects that are happening, and they say, hey, why can't I be a part of that? And so now through this, they potentially can. Excellent.
And just for the people who don't know, you use an acronym IRR a couple of times. Yeah. What can you just explain what that is and what it means, just so that people know? Yeah.
Yep. So internal rate of return. So let's use that other one as an example. So it's a 9.5% interest rate, but because we don't get the interest service on a monthly basis, and therefore it would stay the same at 9.5% on an ongoing basis, because the interest gets capitalised. So you're actually making a as Warren Buffett says, the greatness of compounding interest. You're actually making interest on your interest, so you end up with 9.95% over the course of if it goes longer, it would actually go higher because you're then making more interest on more interest. So that's, I guess, in a simplistic term of one we've already talked about. The IRR for us is the focus. It's what your money's actually going to earn, and it also is time relative as well. So for example, on the townhouse transaction, the IRR was 28 point something, but it was only 10 months. So if you put in 100 grand, at the end of the 10 months, you'd get 124,000 back. But if it went the full term, you'd get 128,000 back. So that's another way of breaking it up.
Excellent. Yeah, I just thought that was important for anyone who didn't know that lingo.
And so also just a further qualification. So those types of investments are open to sophisticated investors, and so to be classified as sophisticated, talk to your accountant. They'll give you a certificate to say you are. You should also inquire about that. It's generally speaking over 2.5 million net assets or over 250,000 of income. It's worth talking to your accountant about it because they might qualify you in a group sense or with your family or whatever, and if you do have that, then it's worth giving to your stockbroker as well, because they also have other exclusive opportunities that they can't offer to the wider public. So it's definitely worth investigating. And so once you're then confirmed as a sophisticated investor, you can then participate in those types of opportunities. So we're not kind of offering $1,000 chunks like some of these new high-tech fintech, whatever they're called, things are.
Excellent. Yeah, I think that's important. And also, just for anyone listening or watching, we are recording this in November 2017, so those rules may change. So as Dan said, make sure that you speak to your accountant, get advice, make sure you know what the rules might be at the particular time that you get to, because laws change all the time, and that's one of the beauties of what I do, is that we get to talk about all the changes. So so that's excellent, Dan. And look, let's wrap up. What's next on the horizon for you in business and with everything that you're doing at the moment?
Yeah, so I think it's more of the same. Kind of getting a little bit more, expanding the horizons a little bit more on our investor base has been really fun over the last kind of couple of months. And doing more of those types of transactions is what I really get excited about. So, participating in more on a joint venture basis in projects. And also now that it's very much dominated by non-bank capital in terms of funding new projects, it's opening new horizons and new lenders and new investor pools. So we're starting to see a lot more capital coming out of Asia to fund these bigger projects. Just last week we got an approval for 80 million to fund a project from a single family out of Asia. So we're seeing different things kind of evolve as the marketplace evolves, and that's definitely something that 2 years ago I wouldn't have thought was something that was realistic. Now it seems to be a fairly regular occurrence that we're seeing those types of checks being written by individual people or by individual players. So that's exciting. And definitely to recap on the joint venture thing, so we're doing some pretty cool joint venture preferred equity investments into projects at the moment. So obviously that townhouse example was one. 28% IRR is pretty cool. We're doing some other ones that will hopefully launch in the new year, which are similar types of returns, but some really good kind of retail commercial assets with ASX 200 tenants taking out either the whole of building or most of building, kind of top tier developers, top tier builders. So we're really looking forward to kind of ramping that up next year and getting a little bit more active in that. We've previously been doing that, but on behalf of kind of singular family office investors who take out the whole portion. And so we've been doing that in that space for a while, but now we're through the Holden Capital Partners platform, we're now offering it a little bit further afield in terms of our investor base. And I'm looking forward to doing more of that.
Excellent. All right. So, well, is there anything that I've missed that we haven't really talked about that you think is important that you want to get across to the viewers and the listeners today?
So probably one thing that when I do get the chance to talk about is really just a developer's business model. So obviously we deal with lots of different types of property developers, inverted commas. Some of them are kind of end up becoming a property developer. Others, have a plan to become one and do. I think a lot of the people we deal with, as I say, they are in that sophisticated space. They are savvy. They are out there doing some fairly sizable transactions. I'd like to say that most of them have a business model and a business plan and a growth kind of contingencies and everything. But unfortunately, because we are dealing with capital, cash is oxygen, as someone we know kind of talks about often. But it's unfortunately something that we do see, is that developers, even of some substantial projects and even brand name developers, when you get short on cash, it is oxygen for your business, and it's definitely oxygen in terms of growing your business. So I think a little bit more forward thought and a little bit more proactiveness rather than reactiveness. As I say, it's not to say that they don't have a business plan, not to say they don't have dreams and goals and visions and all that kind of stuff. That's, most people have that, right? But in terms of an actual contingency plan, in terms of an actual strategy, a growth strategy, and I guess just being a little bit more proactive, it's because of the situation we're in terms of people coming to us for capital. We often see that they're at the other end, which is being too reactive. So that's probably the one thing I'd say that we can hopefully share a little bit of knowledge with.
Yeah, I think it's important. I think it's good for anyone in business, isn't it? Be proactive, don't be reactive. If you're reactive, you never get anything done because you're constantly putting out fires. And if you're proactive, well, you get on top of things and things are happening in a lot more control. I think is probably the word to take from that.
Yep, spot on.
Excellent. All right. So finally, where can people reach you if they want to talk to you about any projects or if or any of the cool stuff that you do? Where can people find you?
Yeah. So we similarly do a podcast where we talk with property developers, market economists, valuers, builders, those kind of guys, specific to our industry. And so we do that. That's on our website, holdencapital.com.au or iTunes or. And then we also have a dictionary on there, which is a bit of light reading. We've got a lot of market updates on there. We've got a book coming next year, which is very much just sharing the information of construction finance and structuring projects and structuring deals. There's a lot of content on our website that helps both investors and property developers. Via the website, reach out to one of the guys on the team and have a chat about your project and what options are available. And definitely in terms of the investor side, holdencapital.com/investment is the way to look at some of the transactions we're doing, and then sign up, and then you'll receive those as they come out. Any questions, feel free to reach out to myself.
Excellent. Well, we'll put those contact details on the show notes. So Dan, thank you very much for your time today.
All right, thanks, mate.
Okay, see you later.
Cheers.